Well, New Zealand's next GDP figures are out at 10:45 this morning, and they'll give us our clearest read yet on whether the economy is finally turning a corner. Joining us now to preview what to expect and why it all matters is Herald Business Editor-at-Large, Liam Dann. Liam, the figures are out at 10:45, so what are the economists predicting?
Yeah, it looks like we will get a good number, something really quite positive, which we haven't seen for a while in the economic news. So we could see, somewhere between about 0.8 to 1% growth for the quarter. So that's a pretty big bounce, considering that this is the third quarter of growth, so up to the end of September 30. But coming out of a terrible second quarter where we went backwards by almost that amount. So that would suggest, that the economy is in recovery.
Yeah, and that's interesting, but also, that going backwards with those previous revisions, one of the interesting things is that those previous quarters are going to be revised, right?
Yeah.
So why is that important?
Well, GDP, counting everything that happens in the economy is a big task, and so when they get, it's sort of a provisional number we get, to be honest, and so that quarter, the second quarter, may not have been as horrendous as we thought once it's all double-checked and tallied, and so we'll be looking to see where that second quarter was. And that means, of course, we have to bear in mind that the bounce, it may not, the third quarter, even if the number's really strong, it may ultimately not be quite as strong as it suggests today. But so for that reason, you really want to look at the direction of travel with GDP and the GDP per capita, what's happening at a sort of when we break it down by population growth and things. So it's the trend, and the trend should still be positive going into the end of the year.
Okay, so how meaningful is that for the average New Zealander? In real world terms? Yeah.
I mean, the economy to the average person is what they feel. Right? Is their job safe? Are they starting to get ahead of the cost of living? Those kind of things. In a lot of ways, it'll depend on your circumstances, but it does create an environment where money's moving around. Business confidence and consumer confidence are coming back, and it sort of creates a platform for things to grow. So I don't think people are going to be sort of shouting from the rooftops, hooray, there's an economic boom, because there is still cost of living issues, and it takes a while for the wage growth and things like that to catch up and get beyond that. So that's probably something for later next year, but it's quite good news going into the end of the year that at least that kind of that sort of it was a surprise slump. We thought we had the recovery this time last year, and when it sort of got pulled out from us in the second quarter, it really hit New Zealand's confidence, business confidence and consumer confidence pretty badly.
And I guess maybe not for you and I going, well, everything's changed, it's wonderful, but certainly for the government, this is something that they will be very pleased about, and will be shouting it from the rooftops.
Yeah, I would expect to hear the Finance Minister putting out press statements and doing a lot of talking today, because this is good news. Compared, say, with a couple of days ago, we had that half-year fiscal update, which was bad news, which, can be a little bit confusing. But
can you break that down for us? Because, last year, just yesterday, Labour was saying, oh, well, the government's failed the economy. And then we're expecting some positive news today.
Well, for those following closely, we knew those half-year numbers were going to be bad because Treasury only updates every 6 months. So their last update was May, which was at the sort of towards the start of that second quarter. You have a terrible second quarter that affects the government's tax take. The forecasts have to be revised down. So all that stuff had to be put into those half-year numbers. And the other thing to remember is that the fiscal update is looking at some of the structural issues in the economy. So what we get today is kind of signs of a cyclical turn. So that the top end of the economy, the bit that we deal with day to day, is starting to look better. Money's starting to flow. People are feeling more confident. The big issues like the deficit and the amount of debt we owe the world aren't going away. I just hope that if we do get a benign economy next year, that's when you've got to grab the moment and deal with some of those bigger problems.
And so, what are the key drivers that you'll be looking at today? Like, consumption, government spending, exports. What are the key areas that would give you confidence that, well, look, this is actually looking relatively positive going into 2026?
It'll be in the industry sectors. We know from some sort of partial data that manufacturing has been picking up. Where it's been slow has been retail growth because consumers have been lacking confidence. So if the retail sector's picked up, that's a good sign. We know the ag sector's been doing well off the back of export prices. So some of those things are probably baked in. But yeah, around things like retail spending, hospitality, all that sort of stuff, if that's starting to turn, that's good news for people.
And is it good news because, you know, GDP is key in terms of jobs, wages, everything else in the economy. It
does follow. I mean, there's a lot of criticism of GDP as a number because it's such a big aggregate number, and it doesn't, describe what's happening to individuals, but it sort of sets a baseline. You know, it's a measure of all the activity in the economy, and if it's growing, then that is a sort of a positive platform for everything else to follow, and if it's contracting, the opposite. So I think the thing is, in context, to look at it as a sort of a framing, a trend that hopefully everything else flows from in the next year.
And the Reserve Bank will obviously be watching all of this pretty closely. So what does it mean if the economy's back in the green, so to speak? What does it mean for interest rates?
Yeah, well, that's where it's sort of a downside for mortgage holders, because the better the economy gets, the more the Reserve Bank has to look at the interest rate settings and go, well, maybe, because they're currently kind of stimulating the economy, they are lower than what would be considered neutral. So if the economy's really strong, then the next move's likely to be up, and there's a lot of debate about when that would be. So we have to wait and see really whether this bounce that we're probably going to get today is sustained, and the lag means that we don't sort of see the fourth quarter, the quarter we're in right now, until March. But what we see today and what we see in March, that will sort of determine how the year looks and where interest rates are going from there, I'd say.
Awesome. Liam Dann, thanks so much for being with us this morning and for your analysis as always. And of course, Liam will have all those details as they come to hand about GDP figures at 10:45 when we get the latest announcement. That is Liam Dann, Herald Business Editor at Large.